Welcome to Tradespoon Live TV. My name is Vlad Karpel, and I'm the founder of Tradespoon. And to my left is a good friend of mine, Joey Cusack from MoneyBlock. Joe, how are you today?
Nice, I'm Joey. That's good.
Joey.
I love it. I love it. How are you guys?
Great.
Good to see you, Vlad.
So let's turn our attention to the first segment, Wall Street week ahead. I know last week we reached the critical level on SPY. 2080 to 2090, so the market is in oversold condition, but the path of least resistance is to the upside. You do have to pay attention to the volume. Volume last week was below the average on the stock market, and the news from Greece and FOMC meetings that are happening tomorrow might affect the market, and we might have a sell-off that, looking at SPY on a 2 standard deviation move, there is a high likelihood of that. So Joe, based on that information, what do you see in the Wall Street week ahead?
You know what, it's funny, Vlad. Right now, just taking a look at the action that you talked about, I have the seasonality chart up, and we'll talk a little bit more about that. But the S&Ps have been basically kind of flat today and going into this week. Volatility is really not agreeing with your sentiments right now of a potential big drop-off. You have seen bonds really drop off hard today. It is Tuesday of this new trading week because we are closed yesterday. Spiders right now are pricing in the potential of moving plus or minus $2.49, and the IV's right around 14.3%. It's low, Vlad. So I'm not seeing that big expectation with a big potential to move to the downside. But again, this has been a uncharacteristically volatile market, so we're going to see, but volatility is not saying that. Watch the FOMC meeting minutes that are going to come out tomorrow. There's going to be a lot of market watchers that are going to watch that. Then watch the housing data that's going to come out. XHB, which is the ETF that tracks housing, pricing in a potential of moving around 62 cents. Vol has been cheap on the front month on that ETF that tracks housing and housing construction. So watch that number closely, see if vol starts to pick up there. Initial claims is going to be the final one, and then crude inventories. Initial claims, watch the small caps, IWM pricing in the potential move of $1.79. End of the week, crude inventories and nat gas. We're going to watch that closely. 98 cents and 59 cents respectively. Vol is cheap there as well, so we're going to keep an eye on that.
Thank you, Joe, for that insight for Wall Street week ahead. And again, you can find out more information if you visit www.tradespoon.com. So now I'd like to turn our attention to the next segment, Wall Street trades of the mechanics of the pick. So where we talked about trading ideas that we had in the past week. We usually cover 2 trades. And the first trade that I'd like to go over is Delta Airline, ticker symbol DAL. The Delta Airline and the transportation sector has been volatile due to oil prices. And as oil prices are stabilizing and found that range between $40 and $60, we believe there is a lot of upside to the Delta Airline based on Tradespoon predictive analytics. Joe, what do you see in the Delta Airline
You know, right now, as far as Delta is concerned, we did have a big IV pop there. The airlines have been volatile. Obviously, the volatility's been to the upside with the crude prices. Again, watch those inventory numbers at the end of the week. Just taking a look at the trades that you put out there. Currently, the stock is trading at $45, so it's basically flat from your stock recommendation. Taking a look at the individual option, the March $43 calls, you went in at $345. They're roughly trading around $325, so down a little bit because vol's pulled off. Watch again to see if vol starts to come into this sector. There might be some profit taking because there's been some impressive moves in the airlines. The option spread, you're looking to sell a put spread that you originally put it on for $1 target gain and your max risk was $1. It's a $3 spread. Right now it's trading roughly around 80 cents. I'm looking at it right now. What I would tell you is if you sold it for $1, take it off for 50 cents. I'd like to take profits at a 50-cent profit. So let's get into the next one for this week, Vlad. I think it was in the casino space, was it not?
Yes. So Wynn Enterprises is the next ticker that we'd like to go over. This has been a recommendation in the past. Ticker symbol WYNN. Again, it's a consumer discretionary sector, and hotels and casinos has been under pressure this year. They've been winners last year, but this year they've been under pressure, and it has to do with they are highly correlated to the volatility in the oil market. So, Joe, what do you see in terms of Wynn?
You know, Wynn's been interesting. Right now, the stock's trading almost exactly where you were putting out the suggestion to be short or get bearish on it. So 155 is the level. Watch that. I think you're right. Weakness could come into play. The options trade 990. It's trading 790. Vol really popped off here, pulled off since you put the trade idea out there. Sell some premium against it if you have the opportunity. Even though the implied volatility rank right now doesn't really tell us that it's down to 4%. I mean, we did see a vol pop that was in front of earnings and so forth. Right now, the spread is trading at around $1.65. The call credit spread, so it's going against you a little bit because Wynn is holding up right now. Keep an eye on it. We could see some potential volatility going into the mid to end of this week, so we want to watch that.
Thank you, Joe, for that insight. And again, if you're looking for more information or trade ideas, visit www.tradespoon.com. And thank you for your time. And now I'd like to turn our attention to the last segment where we talk about volatility and Tradespoon technology. And in terms of volatility, we're kind of going back to the norm, where this year VIX has been traded anywhere as high as 25, and now it dropped. I think there was a print of 1482 on Friday, and VIX did jump today. So I think we are in a volatile market, and I think there is a contrarian indicator when VIX sells off, and such a low level as it is now, it could be a contrarian play where any geopolitical event, such as coming out of the Greece or Russia or Yemen, can create a shock in the markets, be able to buy assets that are highly correlated to volatility in order to protect and hedge your portfolio. So in the next week, Joe, what do you see in terms of volatility?
You know, I think vol is cheap. I think that, but the hard part is, even though vol's cheap, the market is at levels where it's also hard to buy. Especially if you're bullish on the market. It's really also hard to buy if you're bearish on the market. But this is what I would say. We talked about this, looking at the VIX and looking at the VIX options. Now, the cash VIX, which is the VIX that you were referring to, is cheap. They've been knocking down the premiums for puts for quite some time, going into February expiration, which is this week, and even into March. So, but it's still hard to buy those puts right now. If anything, you can go to the pure VIX product. And what you want to do is you want to look at the March expiration cycle and the VIX options. That's following the March VIX future, which is basically trading in that 18 level. So it's a little bit higher than where the cash is, which is what's expected. They're expecting potential movement going into to March. We talked about potentially doing a call spread in there versus doing anything like selling puts or anything of that nature. One call spread that you were talking about, I think you were talking about the 16-19 call spread. That could be very interesting. Still trading around $1.20. So if you're looking to put some protection on, putting a bit something out there at $1.20 or $1.15, trade small. Because you're just looking to add exposure to the volatility markets. That could be an interesting play right now. And the thing is that with March VIX futures trading at roughly around 18-19, you're talking about the 16-19. If you pay $1.20 or something of that nature, or even when the VIX March futures are in that 17 range, you're almost at parity with markets, paying a little bit of premium, not much. I think it's a solid play, and it's something that gives you volatility exposure, and it's defined. Your risk is.
Yes, Joe, thank you for that insight. And I believe that for this week, the SPY or SPX index will be trading in the range between 2062. That's the support. Overhead resistance is 2092. I do look at the Bollinger Bands, and I think the upper band of Bollinger Band, where we define 2 standard deviation move, that's an overhead resistance. The only thing that can carry that over is just past is kind of winding down, and there is no, and if there is no other news, then we slowly going to grind to the upside. But any geopolitical instability or event from Russia or Yemen or Greece,
watch the bonds too.
And the
watch the bonds. The bonds are cracking, and you want to see that. That action could really add something here. So.
Right. So those are something that we keep in mind going into Wall Street week ahead and talking about volatility and Tradespoon tools. If you do want to learn more about Tradespoon tools and technology or our take on the volatility, please visit www.tradespoon.com. Joe, thank you. Thanks everybody for watching.